Good morning, everyone. Welcome to another episode of the Block Thrasher Morning Brew, where we are steaming up today's hottest cryptocurrency news and shattering the complexities of crypto with news, commentary, analysis, and education. Yesterday, everybody was talking about what caused the market to go up. Was it the short squeeze? Was it the rumor from Amazon that Amazon was going to start accepting cryptocurrency as a payment? Or for payments? Was it, and then what caused it to crash? Was it the fact that Amazon came out and said, no, we're not considering that. That's just a rumor. That's not true. What was it? As always, people trying to speculate and figure out why and what. Fast forward to today and what's going on. What's going on with the market? Well, the total market cap is down 1.3%, but it looks like the analysts who were saying, now, the pump was not a result of this new Amazon rumor, might be right. Because currently, Bitcoin is at $38,377. It's still up 24.2% on the week, up 1.2% in the last 24 hours, up 1.2% in the last hour. It's going back up. And the rest of the cryptocurrency market is following, of course. Ethereum is up 1.2% in the last hour. Still up 26.4% on the week at $2,306. Binance Coin is in the green now at $317.27. Cardano up 15.9% on the week. It's gone up in the last hour as well. It's at $1.31. XRP, 65 cents, up 16.1%. We're going to talk about XRP today. I'm going to illustrate to you all, and I hope to not upset anyone here because I know there's XRP fanboys out there in our audience. But there's no need for XRP, and I'm going to show there's a serious threat. Okay, XRP has its issues. We talked about that endlessly here with its SEC legal battles. Okay, but even from its use case standpoint, XRP has an issue, has a serious issue. We're going to talk about that. Dogecoin up 19.3% to 20 cents. Polkadot up 24.6% to 14.38. Uniswap up 21.3% to 19.12. Chainlink up 32% to 19.41. Right now, in this moment, the market is looking very good. But as we know, with this cryptocurrency market right now, volatility rules the day. Up, down, up, down. It is not for the faint of heart. Solana's looking good at 28.85, up 16.3%. Polygon up 42.9% at 105. Tell you, if you had bought some of these great crypto projects last week during the downturn, you're already feeling really good about those purchases, aren't you? But you know, that's what makes this exciting. We don't know what's going to happen. We don't know if the bears are going to win and this market's going to go back down. We don't know if the bulls are going to win and this thing's going to just take off and continue to go up, up, up. And that's what makes it exciting. Bitcoin dominance is currently 45.9%. Ethereum is at 17.2%. And gas prices are, relatively high compared to what they've been of late, 37 GWAY. Yeah, sometimes the cryptocurrency market can kind of mess with your mind a little bit, can't it? It's sort of like a noetic funk. Noetic is our word of the day. Noetic. It means of or relating to the mind. All right, let's jump into the steaming hot cryptocurrency news of the day. What do we have to talk about here? Well, Crypto Fear and Greed Index, as is tracked by alternative.me, is now at 32. Yesterday it was at 26. Last week it was at 19. At one point last week it hit 10. The lower the number, the more fear. The higher the number, the more greed. We hit that low, that bottom of 10. And if you look at the chart here, they've got a really nice chart. For those of you who can't see it, I'll describe it. Last week we hit a low of 10 on July 21st. And boom, we took off. And the prices of the market continue to rise, and the fear and greed index number continue to rise. And this is not uncommon. If you look back at it, it's when there's this huge precipitous drop. Boom. Hit rock bottom. Boom. Shoot back up. Right? And this just goes along with that core principle that we've talked about so many times on the Morning Brew. When everybody else is fearful, that's the time to be greedy. And when everybody else is greedy, that's the time to be fearful. But most people aren't very good at that. Right? We tend to follow the trend. I was reading about one, quote, trader, well-known trader with hundreds of thousands of followers on his YouTube channel, right? About his top 10 crypto picks. And he's picking all of these coins based off the fact that they've already gone up 200, 300%. And, you know, the whole thing made me just sort of laugh, because if you chase after the projects that have already done incredibly well, you've probably missed out. Now, in some cases, you won't have, obviously. But the key is to find those before they take off and follow and you follow the crowd. That's the problem, that's the difficulty. If you really want to be speculative and go after some of those products that are going to have crazy returns, you've got to find them before everybody else is talking about them and everybody else is excited about them, and the greed level is through the roof. Moving on to other stories of the day, Goldman Sachs files an application for a crypto-related ETF. Now, this is an important word here, is crypto-related. If you look into the details of this, they're not necessarily talking about creating an ETF which holds cryptos. They're just talking about creating a crypto that gets exposure. An ETF that gets exposure to the cryptocurrency market. So we're talking about companies like Coinbase and other companies. There's other companies that are talking about going public, such as Kraken and FTX, and Grayscale Bitcoin Trust is talking about going public. So the idea is to put those companies that have traditional equities into this ETF. But still, this is a very positive thing for the cryptocurrency space and shows a move in a direction towards adoption. Here's good news. The GBTC premium now matches the Bitcoin price crash levels as unlocking fear fades. So we talked about that a few days ago. Part of what might have also contributed to this recent market downturn was the fact that you've got all these GBTC shares unlocking, and so people were then able to sell them. Because, when you buy a GBTC share, you have to hold on to it for 6 months, and then it gets unlocked, and then you can sell it if you want. If you're in the profit, and if you're in the positive, you'll sell it, and potentially. And so there's this fear there's just going to be this huge dump. Well, that fear is now fading, and so that's good for the market. And the fact that the premium is matching the Bitcoin price crash levels is also good. The premium is rising. The Grayscale Bitcoin Trust is echoing bullish sentiment in Bitcoin as its premium over spot rises to its highest since May. Moving on. Our last segment of the day. And this is an issue that concerns XRP, Ripple. So just a little background here. Ripple's primary use case was this idea that they wanted to provide an alternative for what already exists in the financial world, traditional global financial world, where banks were using this very outdated, slow, archaic, dinosaur-like system called SWIFT for transferring money from bank to bank around the globe. Now, if you haven't heard of SWIFT before and you want to dig a little bit deeper, you can always go to this very reliable resource, which is investopedia.com, and learn about SWIFT. We'll take a look at it really quickly. I'll just give you a quick overview of how the SWIFT system works. So SWIFT is for electronic funds transfers. Okay. Need to transfer money overseas? Today, it's easy to walk into a bank and transfer money anywhere around the globe. But how does this happen? Behind most international money and security transfers is the Society for Worldwide Interbank Financial Telecommunications, also known as SWIFT. Man, it's a tongueful. But it is the Society for Worldwide Interbank Financial Telecommunications. Or, to make it short and to make it simple and to make it sweet, the SWIFT system. SWIFT is a vast messaging network used by banks and other financial institutions to quickly, accurately, and securely send and receive information such as money transfer instructions. And SWIFT has been around a long time. More than 11,000 SWIFT member institutions sent over 35 million transactions per day through the network in 2020. It's a behemoth. The organization recorded an average of 42.5 million messages per day on a year-to-date basis in March 2021, and traffic grew by 9.8% compared to the same period of the previous year. Prior to SWIFT, Telex was the only available means of message confirmation for international funds transfer. Telex was hampered by low speed, security concerns, and a free message format. In other words, Telex did not have a unified system of codes like SWIFT to name banks and describe transactions. Telex senders had to describe every transaction in sentences that were then interpreted and executed by the receiver. This led to many human errors. To circumvent these problems, the SWIFT system was formed in 1973. 6 major international banks formed a cooperative society to operate a global network that would transfer financial messages in a secure and timely manner. So here's the deal. Brad Garlinghouse of Ripple Labs came along and said, SWIFT is slow, SWIFT is archaic, SWIFT is, and 6% or some percentage, I forget, 60%, some of the transactions have to be actually manually confirmed by a human. We can use the blockchain to do that, and we can provide a much better system, and we're going to try to break into it, and we're going to try to replace SWIFT with XRP. How's that going? Well, here's where this news story today comes into play. This is from businesswire.com. SWIFT launches SWIFT Go, a fast, cost-effective service for low-value cross-border payments. New service enables businesses and consumers to send payments in seconds with full transparency and strong security. SWIFT Go is a key building block in the cooperative's strategy to enable instant and frictionless cross-border transactions. 7 leading global banks are already live with this service. SWIFT today announces the launch of SWIFT Go, a transformative new service that enables small businesses and consumers to send fast, predictable. Okay. I'm not going to go through all this. What I'm going to tell you is this. SWIFT is a cooperative that is controlled by its members, major banking institutions around the world. It's been in existence since 1973, as we read. It is part of the old guard, if you will, located in Brussels, I believe, Switzerland. And what they've done is they have created a blockchain-driven solution with similar speed and all of that to XRP. They've used R3. It was stated here somewhere. I don't know if it was in this article or somewhere else that I saw it. But bottom line, here's the deal. They initially were considering looking at Ripple Labs XRP to provide this kind of technology and functionality, but they chose not to. They decided to go with R3, an R3-based blockchain instead. I just want to confirm that that's the blockchain. I want to make sure my memory is not incorrect here. Let's see. CoinDesk has an article about this as well today, and they'll probably mention which blockchain is used. It seems like the article that I was looking at here from the other source did not mention it, so we'll see if it mentions it here. But the long story short here is that Ripple is trying to break into this market where Swift is already dominating, has been around forever, is part of the old guard, is well entrenched, well established, and now has similar technology. Right now, somebody might argue, the XRP is a little better than that. But to me, it just doesn't seem like XRP is going to be able to succeed in that realm because it's so easy. I mean, Swift was just easily able to create an alternative system to provide the same type of functionality because there's nothing proprietary about what XRP is trying to do. I mean, that said, it is a private blockchain that they do provide private blockchains that have proprietary elements to it, but there's so many open source solutions and others. In this case, I believe, let's see if I can find it here really quickly to see 7 major global banks and today the service is designed. SwiftGo may be seen as an attempt to compete with the global real-time payment system provided by Ripple. Actually, it's the opposite. It's the other way around. Ripple's trying to compete with Swift. After Swift announced a new platform to start, they don't mention it here either. Okay. Which blockchain is SwiftGo using? See if good old Google can give us an answer. Finance feed. R3. There it is. R3's Corda distributed ledger technology. Good old ZDNet. Oh, look. Forbes has an article. Forbes article. Swift's battle for international payments. Perhaps the most useful thing that disruptive technologies such as cryptocurrencies have done is to kick existing payments providers out of their complacency. 2 days after Facebook announced its one cryptocurrency to rule them all, the international messaging service Swift announced its own plan for world domination. According to its press release, Swift's aim is simple: to make cross-border payments real-time, 24/7, and as seamless, convenient, cost-effective, and accessible as domestic payments. That's quite an ambition. Despite their claim to have revolutionized international payments, cryptocurrencies and other disruptive financial technologies have not so far achieved anything like this level of service. Could legacy providers succeed where they have failed? Creating its own cryptocurrency doesn't feature in Swift's plan. Nope, of course, they're not going to do that. A Swift cryptocurrency would simply add to what Swift sees as the real problem of international payments, namely the proliferation of self-contained currency systems such as Bitcoin, JPM Coin, and since its adoption, XRP, Ripple. Importantly, they say, we don't think that cross-border payments challenges should be solved for with closed-loop systems. Doing so would easily solve for a subset of, or multiple subsets of participants, but value needs to move everywhere, from every account to every account. This is an old article going back to July 16th of 2019. Fast forward to today, July 27th. 2 years later, and Swift announces that they've accomplished it using the R3 blockchain. So yeah, I mean, it's XRP is got an uphill battle here. I mean, Swift is so well entrenched and in bed with the global financial monetary system that it seems to me highly unlikely. It's just highly unlikely. Very, very highly unlikely that XRP, especially considering, and the SEC got the. All right, I digress. I think I've said enough on that for the day. All right. We've been talking about inflation, the insidious thief, and going over this report that was put out by Kraken's intelligence research team. And today we're just going to conclude that. The last thing we were talking about was how to hedge, how to protect your wealth from the inflation that is always occurring, but especially potentially getting much, much worse moving forward because of the response to COVID and all the crazy things that were outlined in this report. Things such as the fact that the monetary base was increased by 70%, and there's quantitative easing like we've never seen before, and it just goes on and on and on. Well, the ways to do this traditionally have been gold. We talked about gold. It's been a good hedge against inflation. We talked about Bitcoin and cryptocurrency, the new gold, stocks, real estate, and inflation-linked bonds. So in conclusion, as we've already alluded to, understanding the economic phenomenon that is inflation isn't just for economists, market participants, and intellectually curious, but for everyone. Inflation is paradoxically a silent friend and a silent foe. It can serve as a financial tailwind for some and a painfully relentless wealth destroyer for many others. That is massively huge concept. That is right there one of the primary reasons. If you're not into cryptocurrency for ideological reasons, what are the ideological reasons that drive people to cryptocurrency? Well, historically speaking, a lot of the cryptocurrencies were created by libertarian-minded people, people that wanted freedom, people that didn't want to be under the thumb, as what they viewed to be the oppressive thumb of the financial regime, we'll call it, with the built-in costs, the built-in, and one of the greatest, probably most significant cost being the inflationary aspect of the fact that as you hold the currency, and its purchasing power decreases and it becomes worth less and less and less, forcing you thereby to spend it. Right? So we're looking at that. So even if you're not on board with the privacy aspects, you're not on board with the idea that money should be private and not controlled, just from a purely economic intelligence, investment intelligence standpoint, to protect yourself and to hedge against inflation, you want to be in these things, gold and real estate and cryptocurrency now as a deflationary asset. Because as this states, inflation can be a tailwind for you if you're in the right deflationary assets, if you're in the right crypto, if you're in the right real estate. And it can be a painful and relentless wealth destroyer for those who are not, for those who have their wealth in inflation, in the dollar, in the currencies, the fiat currencies, which lose purchasing power rapidly. Not only can inflation be devastating to businesses and individuals when it gets out of hand, particularly when times are already tough, but it can be a powerful force of good for governments. Do you get that? Oh, man. Kraken, kudos to the guys over here for just brilliantly and so clearly outlining the reality of this factor here, this fact that inflation is going to happen. Because inflation is a force, as they state, for good for governments. Governments spend. They're like heroin addicts. They're like addicted because, and you know what? They're altruistic and they probably have good intentions. We're going to help these people. People are hurting. We got to help these people. We have the ability to do it. Spend. Debt. Now, how do we deal with the debt? Inflation. In the past, we've seen governments and central banks attempt to control inflation by employing contractionary monetary policies, such as modifying the central bank's discount rate, changing the bank reserve requirement, and conducting open market operations. And one of the most, historically famous periods of time like that was when Paul Volcker came in and raised interest rates significantly. And boy, I tell you what, those were tough times back in the 70s and People barely buy homes because, the payments were going to be so high. And in the end, what happened? We came out of that and we had great economies in the 80s, 90s, even, going forward. But going back to the report here, when governments and central banks fail to keep a tight leash on inflation and rely on arguably inefficient measures of inflation, which is what the point being here is they're cooking the books now, then businesses, economies, and even livelihoods can be in great danger because of what seems to be government and central banks' innate tendency to push inflation to detrimentally elevated levels. Individuals have learned over time how to better store their wealth to protect themselves against abnormally high levels of inflation. While assets like gold, real estate, inflation-adjusted bonds, and some stocks have proven to be useful hedges against inflation, the emergence of Bitcoin and crypto assets has some market participants questioning how to protect one's wealth in today's modern-day economy. This shift in belief and thinking is evident by institutional investors such as MicroStrategy's Michael Saylor, Bridgewater's Ray Dalio, and legendary investor Paul Tudor Jones, outright vocalizing support for Bitcoin. Needless to say, while there is no telling what lies ahead, fortune favors the bold. By understanding the ins and outs of inflation and the multitude of tools one can use against reckless monetary policies, one can better protect their wealth and truly be better off. And here's my take on that, by way of summary. Cryptocurrency is probably going to be the best hedge against inflation out of all of these options. And the reason is it is the most deflationary because of its truly fixed supply. Truly fixed supply. In addition to that, it's still a new market. It's a small space. It has the potential to not only be that inflationary hedge, but also see massive growth as more adoption occurs, which means that if you put your money into it as a hedge against inflation, you could also benefit from the crazy gains that happen. Now, here's the caveat. It's not for the faint of heart. It's not for the weak-stomached because it's also very volatile, as we've been seeing over and over again, where Bitcoin can go from $3,000 to $60,000, back down to $29,000, back up to $40,000, and then, and it's this crazy ride, this crazy roller coaster. But gold doesn't do that. Gold doesn't go from 3,000 to 60, not even close. Neither do any of these other assets. So if you're younger, if you have a higher risk tolerance, you can put more of a percentage in to the cryptocurrency space for these purposes, to hedge against inflation, but also kind of speculative, as a speculative investment. If you're older, you probably want more percentage in things like real estate or inflation-adjusted bonds or some of these other things that we've talked about, gold, silver, etc., which are less volatile, but also hedges against inflation. And then it depends on where you are on the spectrum. Like, you don't want to put all your money into crypto and not be able to pay your rent, or so obviously a good strategy is diversification, depending upon your risk tolerance, your age, and how much money you have to work with all of this. If you are already a crypto millionaire, to have 100% in if you became a crypto millionaire, multimillionaire, because you got into crypto early, would not be particularly wise to just keep it all in crypto. Get some real estate, get some gold, diversify. And on the flip side, if you're just in real estate and you're a millionaire, multimillionaire or more, you'd be crazy not to put allocate a decent, I can tell you what percentage exactly, but a decent percentage of your crypto of your money into crypto to benefit from its growth in adoption. Needless to say, while there is no telling what lies ahead, fortune favors the bold. By understanding the ins and outs of inflation and the multitude of tools one can use against reckless monetary policies, one can better protect their wealth and truly be better off. Amen to that. We're going to wrap things up with that. Thank you so much for your time today. Appreciate you all. This has been a great episode. I really enjoy I really, really enjoy talking about crypto with all of you, and I hope that you do too, and just keep coming back and share the Block Thrasher Morning Brew with your friends and your family and others. Let's help grow this audience so that I can do an even better job of bringing this content to you all. Well, I hope you have an incredible Tuesday. I will talk with you tomorrow morning, 7 o'clock. Be there. Bye now.